Hello and welcome to Building the Premier Accounting Firm. I'm Roger Knecht, your host, and this is a podcast dedicated to helping individuals have a successful accounting, bookkeeping, and tax business. The purpose of this show is actually to help you as an accounting professional confidently and competently offer quality accounting services to get paid what you're worth. Each of the episodes is conversational with tips and tricks to basically help you apply the principles that you need to effectively market, sell, offer quality accounting services, price your services, covering topics such as pricing strategies, accounting services, value-added services, workflow, practice management, staff training, client onboarding, and so much more. I'm your host, Roger Knecht, president of Universal Accounting Center, and for more than 20 years, I've been working with accounting professionals to help them both start and build accounting businesses successfully around the world. It's in that process that I've had the privilege of getting to know some amazing individuals and actually help them see them accomplish their dreams. Now, as we've gone through this journey, it's obviously been one with ups and downs, and it's my purpose and hope to share some of those insights to you in each of these podcasts that we have. Now, with regards to today's podcast, I have a special guest, someone that you may be familiar with. It's Ken Boyd. Ken is a 4-time Dummies author, blogger, and provides video content on accountingaccidental.com. Ken is the author of Cost Accounting for Dummies, Accounting All-in-One for Dummies, the CPA Exam for Dummies, and 1001 Accounting Questions for Dummies. As a former CPA, auditor, tax preparer, and college professor, Boyd brings a wealth of business experience and education to this audience. So I'm excited to have you on the show, Ken. Welcome and thanks for being here.
Hey, thanks for having me. I appreciate it.
Yeah, no, this is going to be, I think, an amazing discussion because you have such a wealth of information, especially the things that you've imparted in the books. But I want to back up a little bit. I want to go a few years back and let's look at what even drew you to the accounting profession to begin with. What started you on this path?
Well, my path was non-traditional. I'm 58, and I actually started as an investment advisor in the mid to late 80s, 85 to 90. I was an investment advisor. And my dad was also in the business. I worked with my dad for a period of that time. And what I found out was that was more of a sales role. And I found out that I really didn't want to spend my career in a sales role. And I was always interested in accounting. So I actually, after 4 years working as an investment rep, I went back to undergrad, took about 25 hours of accounting I needed to take the CPA exam. My wife was also starting an accounting career, and we both started at Big Four firms around 1990. So that's how I got in the business.
So were you fortunate enough to both be in the same company or should I say unfortunate enough to be in the same company? I don't know which, but you'll tell me.
We were in the same building. We were not in the same company. She was at the former Arthur Andersen. She was in audit. I was in KPMG in audit, and we actually worked in the same building in downtown St. Louis.
That is fascinating. So obviously you both finish your degrees, start working in the same building. What was it about that experience that led you to then take the next step, which was obviously in your career to now be a former CPA at this point?
Yeah, I always tell people, and I'm at an age where a lot of my friends have kids who are starting or working in public accounting in Big Four or otherwise. And I always say that we both were in public accounting for 3 years till we had our first child. It was an incredible learning experience. I still use things today that I learned when I was in audit. But I had, as most people in Big Four will tell you, and other accounting firms, I didn't have a lot of control over my time. And by the time we had our first child, it was just sort of untenable to stay in it. But it was a fantastic experience. I got to work on a lot of different audits, Fortune 500 companies, small banks, you name it. And it was a great experience.
So you said you draw from it. What are some of the things that you experienced so early on in your career that you still reference today?
A couple things. The first is when you do an audit, you audit the balance sheet. So those audit procedures for auditing cash, accounts receivable, inventory, and how the income statement analysis comes out of the audit work that you've done on the balance sheet. Just the whole big picture of what financial statements are, what are the assertions we're trying to test, for each account. All that work that I first learned in the early 90s, I still use in writing, in video work today.
Very good. And obviously, you have your first child, as you mentioned. What changed? You left, obviously, being an auditor. What did you do next?
I actually spent a lot of time as sort of a freelancer. I worked did a lot of nonprofit accounting work for years here in St. Louis. I was really sort of a freelancer from that time on. And then so let's say that that's 1992. So between 1992 and about 2010, I was a freelance accounting person doing contract work as an accountant. So that period of time was full-time accounting until about 2010 or so.
So, what was it about those years from 92 to 2010, let's say, where you're doing the freelance accounting, that when you look back, you're fond of? What about that period of time is something that you really appreciate and remember fondly?
I got to know a lot about a lot of different businesses, and particularly the nonprofit world, which I always had an interest in. I did not get a chance to work on nonprofit when I was at KPMG. There are a lot of great organizations where I am in St. Louis that, including United Way, where I did some work for a while, and getting to know people on the nonprofit side, how passionate they are, and also finding out about the people who fund the nonprofits, what they're passionate about, seeing the whole picture, seeing how nonprofits are run, how programs are put into the field. That was really something I really enjoyed. And it was something that I did not get exposed to when I was at KPMG.
Yeah. So I think a lot of our listeners not only can identify with your journey, many of them, like you, may not have actually started in the accounting profession as a career choice and may have fallen back to it. You obviously kind of experienced that same thing. You went into the major companies doing as you did with KPMG, the traditional CPA path. And I think a lot of people identify with that because they then, like you, ended up going out on their own. And at that time, started their business, experienced, I'm sure, some of the things that you're referencing, that exposure to so many clients and working with so many passionate business owners, as you mentioned with the nonprofits. There's a good deal of passion that these people bring to the companies that they run, and you get exposed to different ones as you have all these clients. And I think that in many instances is not only invigorating because that's contagious, but at the same time, I think it's inspiring. It compels you to do a good job and deliver a quality service for the things that they need to run their businesses more effectively. So I like how you kind of tied that in there. Now, in that period of time, before we leave that portion of your career, in that period of time, the lessons learned, if you were to go back and speak to your past self, what advice would you give to your 1992 individual as they were starting that journey and were about to work with all those clients that you did? What advice would you have for them?
Yeah, it's a really good point. I think having tenacity about your work is really important as an accountant. And the reason is the business owner doesn't have time, can't invest the time to do what they do what they need to do to both get the accounting done in a way that's accurate and understand the data that they generate. So being tenacious about not only getting the work done, but getting the information explained to the client in a way where they can use it, I think is the most important lesson. I think one of the problems that we have today is technology gives us way too much information. I do a lot of writing for QuickBooks. If you have people in your audience who provide QuickBooks services,
Mm-hmm.
that you can generate hundreds of reports out of QuickBooks, and most business owners are overwhelmed by the amount of information, and they need accountants to break it down. What are the 5 reports I really need to look at the end of the month, for example?
Yes.
So I think the real key, and I've been self-employed since 1990, is you really have to have a tenacity and you really have to invest extra time to help the business owner.
I think there's so much in what you're just sharing there. I want to tap into a few of these things. First of all, one of the things that I think you're identifying is the need for the accounting professional to be what I refer to as the interpreter. It's that translator. Accounting's the language of business. The business owner oftentimes doesn't speak that language. You've got information overload, as you were describing. And so the role of the accounting professional is to take all of that information and try and identify what is the information that the business owner needs. And so we're going to basically identify and find the trends and the anomalies that we need to bring to the attention of the business owner so that they can make more informed business decisions. Now, in that process, one of the things that I think is important, and I think you would agree with me regarding all these reports, is we do need to identify the key performance indicators, the KPIs for
Right.
that business that they should be looking at on a regular basis, because it's those things that matter most to the decision making. And then at the same time, within those key performance indicators, those KPIs, we need to distinguish between leading indicators that we're watching in the business that tells us of something coming, and lagging indicators that identify what was accomplished or achieved. And if we can distinguish between the leading indicators that the business owner needs to be paying attention to and the lagging indicators that define what was accomplished, all of a sudden, I think we've made the information digestible so that the business owner can now use it intelligently to run their business. So our role is to take, like you just described, all that information. We're looking at it. We should be inquisitive and curious enough to dive into and look at that information, not because we're going to communicate all of it now to the client, but we're going to now know more about the numbers of the business than the owner perhaps knows. And we're going to be that resource to them to bring to their attention things that they need to be aware of, because it's caught our eye, our professional eye. And that's one of the things that I think is so important about what you just described. So obviously I was on a little bit of a rant there. What would you add to that?
I think that leading versus lagging is a great point that I frankly don't bring up, but it's really important. It's a lot like economic data. If folks in your audience, when you took micro or macroeconomics, leading and lagging indicators in that world, it's the same thing in accounting. I think, for example, most companies that are manufacturers, retailers, wholesalers, when it comes to inventory, they're probably carrying too much inventory as a dollar figure, and that they're not making the investment to analyze that and lower the cost of inventory, as an example. The second one is they're probably not collecting money fast enough because they don't have a written disciplined approach to emailing and calling people who owe them money.
Mm-hmm.
And if you think about it, inventory and accounts receivable is tying up more cash on the balance sheet than any other category. And those are two big ones that people really have to pay attention to.
Yeah. No, I think that's a very good point to point out. So thank you. The processes to collect on those receivables, they need to be very specific and deliberate, because you're tying up so much of the resource you need to run the business, the cash flow. So well said. Let me ask about now your transition to becoming a college professor. I find that fascinating. Not everyone in the accounting profession ends up going back into academia. So what kind of caused that to happen, and tell us about what that involved.
Yeah, it started part time in the late 90s. So in 1999, I actually answered a blind ad, as I recall, that a company that is now called Dearborn Financial, it's now owned by Kaplan. Most people know Kaplan, was looking for instructors to train people to teach a review course for people who were getting what is now FINRA licensed to be investment advisors. So if anybody in your audience is FINRA licensed, the Series 6 exam and the Series 7 exam. So what I did was, my first experience teaching was I taught a week-long, once a month, week-long course for people who were getting licensed to be investment advisors in St. Louis. And over 4 years, I probably taught about 1,000 people. I still run into people who were in my class. And it turns out that one of the guys who took that class, who was an accountant, was an adjunct professor at St. Louis University. And he referred me to the university, and I taught most of the undergraduate courses between about 2002 and 2005 at St. Louis University as an adjunct professor, which was a lot of fun. So that's how I got into part-time teaching. And then in about 05, 06, I got so busy I didn't take on any more teaching assignments, but I did teach part-time at the university for 3 years.
Although you're not doing it any longer, it is something that's still part of my life. It's something that, as I'm running Universal Accounting, I'm still involved with that quite heavily. And so, one of the things that I appreciate about what you just shared is the fact that it does impact individuals' lives, and it's years and years later that sometimes you run into them, and more importantly, hear of how it transformed their situation and put them on a trajectory that maybe they didn't understand or realize, but it's been a blessing in their lives. And so it's kind of nice to know that you're part of that success, that you had a positive impact on someone. So I can identify with that even today. And it's an unknown or unexpected benefit of having been in this capacity. So that is true.
Yeah, very much so. In fact, I ran into a guy at the gym within the last 6 months who was a student of mine at St. Louis University, who I didn't, obviously it's been so long I didn't remember, but
yeah,
people will run into me that either had me as a student at St. Louis University or were in my test prep class. It happens every 2 or 3 months. And it is rewarding to hear from those people.
Yeah. So obviously that comes to an end. So it's going to bring me now to these books. So I find it fascinating when anyone writes one book. You've got 4 here that I brought up that you had mentioned. The Dummies series is interesting in and of itself. So let me kind of take this in bite-sized pieces. First of all, what brought you to even want to write a book? That's kind of a lofty thing that a lot of people aspire to do, but oftentimes never do. What caused you to want to write a book to begin with?
It's a weird story. So I started a YouTube channel in 2008 that has about 450 videos on it now. I'm mostly accounting because I thought that a lot of the accounting instruction I saw on YouTube just wasn't very good. And in 2012, a literary agent, who is now my agent, who only represents Dummies book authors, that's full-time what he does, he was Googling cost accounting. And I had some videos on my YouTube channel that ranked high in a Google search for cost accounting. And he watched some of my videos and he sent me an email in April of 2012. And he said, I watched some of your videos. I think you could write a Dummies book. I need somebody to write cost accounting for dummies. And it turned out to be absolutely the hardest thing I have ever done. It was brutal because the Dummies series has hundreds of unwritten rules that you really don't learn until you start writing the book, because the books are so carefully structured, every single one. And the learning curve was massive. And so my agent ended up hiring a technical writer who helped me finish the first book. And he said, if you just hang in there, they'll have you write more and it'll get easier. And that is true. So my first book came out in March of 13. So between March of 13 and late 17, I wrote the 4 books. It took about 500 hours for each book when I add up the total time. So it was about 20 hours a week for 25 weeks in each case to write a book. I'm a fairly slow writer in comparison based on talking with other writers. So I stumbled into it, and my agent not only got me the 4 book deals, but got me my LinkedIn Learning video deal, and has gotten me other video work, and has been, a real, just a godsend to me in terms of sending me work. Turned out, and is just a great guy. And I have referred other authors to him, hoping that he has gotten business out of it. So that I stumbled into writing a book. I had no intention of doing it.
So what you just described is, I think, what a lot of the listeners would like to know is this something that they should aspire to do, or is this something that they can accomplish? Because I presume many do, in fact, have an intent to write a book, But you're so spot on. It takes a lot of time, a lot of dedication, and when you're working for a series like Dummies, there's a format that they're expecting you to deliver on. So you've got to conform to what it is that they're expecting to meet that expectation. So that's good. Let's kind of go through the 4 books, because just I find these interesting. Cost Accounting for Dummies, Accounting All-in-One for Dummies, the CPA Exam for Dummies, and 1,001 Accounting Questions for Dummies. So let me just go one by one and tell me a synopsis of each as we go. But I'm more interested in who is the target audience in your mind for each. When we get to the CPA one, that'll be obvious. But
Uh-huh.
but each of the 4, who's the audience, and what's kind of a summary of the book? So cost accounting for dummies. Let's start there.
The audience for Cost Accounting for Dummies is undergrads who are in the course or going to take cost accounting. The other audience, and I can tell you based on people I hear from who buy the book, are people who are accountants at medium-sized and larger firms, not small firms, medium-sized, larger firms who have not done much cost accounting in their job. They stumble across it. Now they have to do some cost accounting and they need help. The gist of the book is uh, the most time is spent distinguishing between job costing and process costing, variance analysis. Those are the big topics in the book. Um, and Dummies is such that just those topics, job costing, process costing, and all the different kinds of variance analysis, that takes up the bulk of the book. And those are the topics that people really need to know.
Good. I like that. That was an excellent explanation of that one. Let's talk about Accounting All-in-One for Dummies.
So if you've ever bought a Dummies book, every Dummies topic, most of them have an all-in-one book. So investing all-in-one, you name it. So the all-in-one book was a compilation book. So what I did was I took cost accounting and 11 other books that were written by other authors. And I basically took about 4,000 pages of information, took out what I thought were the most pertinent parts, and I ended up putting together a 792-page book out of about 4,000 pages. So most of that work was puzzle pieces. So I was taking chapters from other books, putting them in a certain order, seeing if we could transition from one chapter to the next.
Mm-hmm.
And if you look at that book on Amazon, I'm actually one of 11 or 12 authors listed. But that is a compilation of probably 11 books and is double the size. A normal Dummies book is standardized at 358 pages. That book is 792 pages.
Wow. So as a book itself, who would read that? Who's the audience for that?
I think the audience there is, and that book sells 2 or 3 times what my other books sell, is really the person who is either A, taking their first accounting class in undergrad, or B, a business owner who has no business background and is like, I don't even know where to begin with accounting. And most people who buy the all-in-one books do not read the whole thing. And the book is designed where you can dive into any section of the book and it's modular and it stands alone,
Mm-hmm.
which is one of the challenges of writing a Dummies book. It has to be designed so that anybody can dive into any part of the book and get what they need. So most people, I suspect, who buy the all-in-one book do not read the whole thing. There are probably sections they never read.
Yeah. Let's talk about the CPA exam for dummies. So who's it for, and what is it in summary?
Yeah, the CPA exam for dummies it's for CPA exam candidates. However, it is not supposed to be a comprehensive look at the whole exam. I do a lot of work in the CPA test prep space, question writing, and other work. It is supposed to be an overview so that if you're considering taking the exam, before you go out and buy Becker CPA Review or some other review course, you hopefully would buy CPA Exam for Dummies to get an overview before you dive in and start studying intensely. That's who that book is designed for.
Good. And then the 1001 Accounting Questions for Dummies.
So that book came out of a campaign or a push that Dummies did to do 1,001 questions in as many different topics as they could. So 1,001 finance, 1,001 investments, etc. So I was given a test bank of questions that Wiley owns the Dummies brand, and Wiley has a CPA review test product. So that book is designed to help undergraduate students who are taking accounting courses, but also to push readers over to the Wiley CPA review product, which is owned by the parent company.
Very good.
So it's really undergraduates who need a bigger test bank of questions for a course they're taking.
Very good. Now, your summaries of each of those books was, I think, very spot on. And I appreciate you taking the time to do that, because one of the things that I think as accounting professionals, we realize is sometimes we need a refresher, and it's nice to have something to lean on and draw to. I really liked your all-in-one for dummies in the sense that we're oftentimes working with business owners that may feel intimidated by or basically scared, let's say, to ask the right questions. And so
Right.
for them to kind of understand the entire accounting model and realize what is going on, kind of the big picture approach to everything, that might actually be a good reference gift that could be given to a client that just may feel a little overwhelmed or just kind of in the dark as to what's going on, but willing to pay for and get the accounting reports that they need. But at the end of the day, they just don't know yet what they're looking at or what they should be looking for. So good little introduction to all that. So with that being said, I want to break away real quickly and mention some things related to our sponsors. And I'm going to come back to this. The first thing I'd like you to understand is Ken has made available something that you'd want to take advantage of. This information can be found in the episode description, so you'll want to go there for this information. But he's inviting the audience to actually go to a conference room. It's a free community where he provides content on accounting and personal finance matters. Basically, there is a link in the episode description that you can use to go there and participate in this group. And there you'll actually be able to click on Explore and then go to Find Events in the left-hand column, and you'll actually be able to sign up for his next Ask Me Anything, where he answers members' questions in a 1-hour live chat. So if you'd like to participate in that and have access to Ken, go to the episode description and there find the information you need to click on and go to this conference room where you can explore the next events and actually schedule a time to participate in the Ask Me Anything session that Ken facilitates. The other that I'd like to point out is that there's a book that you need to have that Universal Accounting Center is making available as a sponsor of today's episode. It's the book Red to Black in 30 Days. It's a small business accountant's guide to quick turnarounds. It's your how-to book for accounting professionals to help business owners with the most common challenge they face, which is cash flow management. This is your how-to guide to actually help them navigate the things that they may need to experience to take their business from being in the red to being in the black. So go to the episode description to get your free copy of Red to Black in 30 Days. So coming back to our conversation here, let me just kind of dive into a few things with you, Ken. Why is developing a niche such a great idea for accounting professionals?
In recent years, I have become more and more convinced in writing about lots of different businesses that niches not only are something somebody should do, it's really the only way to do business for a couple of reasons. The first is it helps you distinguish yourself in a sort of a world of sameness where everything's the same. The second is that it allows you to dig deeper and find out more about what people really need on a more granular level. So using myself as an example, I only write about accounting and finance, and there's other work that I turn away. I don't write video scripts. I don't do a lot of work with tax. I do mostly on accounting. I have really narrowed my focus. And it helps people identify what I do. And it also allows me to dig deeper to find out what a specific niche needs. So I am a huge believer in niche. Now, the complaint, the fear is that you're going to leave other money on the table and leave other business on the table. That has not been my experience. In fact, in business, I see most people doing more business in a niche than trying to be everything to everybody. So I'm a huge believer in product niche.
So, what you're describing there is definitely committing to and becoming an expert in a specific area. And
Uh-huh.
I'm sure that leads to needing to be able to say no on occasion. There's
Uh-huh.
obviously distractions that can come in that may appear to be harmless, but they're obviously tangents or distractions from your being focused on that niche. Is it okay to say no sometimes?
It's absolutely required to say no. Uh, I've said no to, and I'm using myself as an example, not to toot my own horn, but just because it's an easy analogy. Uh, I have turned down book deals on topics that I didn't think were my specialty, for example. And the other thing with saying no is that it allows you to focus and it allows you to become an expert in a very narrow lane. And spreading yourself, and I did this for years and it never worked, but being all things to all people is difficult because you have to keep up to speed on more topics. Where if you're in a niche, it's much easier to maintain your expertise. So I think saying no is critically important.
I've got an interesting experience that's related to that. This was a few years ago, and I did a daring thing. I had heard for many years you need to be able to say no and say no more often. And as a parent, I found that I was saying no to my children for really just inconsequential things.
Uh-huh.
Dad, can I stay over a half hour longer? Dad, can I have a dessert tonight? And I was like, why am I saying no to all these things? Why don't you just say yes? So I for a year committed, I would say yes to anything. And it was a fascinating experiment for me because really what it was is I was curious, what opportunities am I denying myself by just saying no? No seemed like the easier answer to so many things.
Uh-huh.
And so I purposely said yes to everything and would try to make everything possible. These were requests for my time. These were requests for me to go places, do things. It was just, could I be the yes man? And not the yes man in the sense that I'm just agreeing to agree, but yes in the sense of requests on my time, my talents. Why do I have to be the confrontational one, in other words? And I had
Uh-huh.
some amazing experiences. The biggest challenge that I learned from it, and now I'm very comfortable again saying no, was time. Time, probably more than anything, became the biggest challenge simply because I was committing myself, overextending myself in some respects. And
Uh-huh.
people started to realize that they could expect me to do things. And so it became easier for them to ask for my time. So love the experience of saying yes. I got to experience things that I normally would say, no, I'd rather not. I mean, it's the simple things of let's go to this movie, or let's go to this restaurant, or let's go to this person's house and go to this activity. In the past, it was easier to say no and just sit home. Saying yes that entire year exposed me to new people, new things, new experiences, and I really enjoyed that and have changed from that. But to your point about saying no, it does in business lend itself to not be distracted by things that make you money. It's keeping you focused on what you are good at and where you make biggest return. It allows you to become known as the expert because you're specific in the space you're in. So I like how you said that you've turned away things, but it's not resulted necessarily in you losing money. So that I think is a very key part. So let's talk about money a little bit. One of the things I wanted to ask you is about price. Does increasing your prices when offering accounting services cause you to lose business or maybe even frustrate clients? What's your opinion on that?
My opinion is that the majority of your clients value what you do. The majority of your clients are willing to pay more. Some of your clients, a small number, are going to complain about price increases. And and so I am for raising prices to reflect the value that you really provide. And the other thing, whether it's raising prices for clients or a retailer raising a price on a certain product, is is that it allows people who are don't value you as much to sort of weed themselves out and maybe eventually leave your business, which is not a bad thing. Um, so I am for raising prices because people are willing to pay more who you value, people who don't value you as much are not willing to pay more, and maybe you shouldn't be doing business with those people to begin with.
Yeah. Just two things that I usually bring up regarding pricing. Regarding the 80/20 rule, I do find that there are clients that make up the 20% who try to milk every
Uh-huh.
situation, every penny out of the relationship. And they can oftentimes be exhausting. And in reality, they may not be the most profitable clients that you have. So it's good to sometimes reassess those pricing strategies you're using in your business and the relationships you have with your client. And then the second thing is, whenever I do pricing discussions, I always suggest that you should at least assess why your fees are what they are, probably on a very simple basis, just yearly. But the challenge I always extend to people when I'm having this pricing increase discussion is to challenge, for every price increase you're trying to justify, make sure you equate with it some new product or service or value add that can, in your mind, justify the change in the pricing and give you cause and reason to explain the increase to the clients more than just, I'm raising my prices. In
Uh-huh.
addition, here's the reason why. And if you can validate it with something that has a perceived value greater than the increase, the likelihood of the kickback, the resistance, is far less, because they can see that you're now offering more above and beyond with that product or service, that they're able to maybe kind of shrug their shoulders and go, okay, I get what you're doing, and I'm getting more, rather than just what cost me yesterday one thing is the exact same thing I'm getting tomorrow, but it now costs more. So I always try to say, what more can you bring to the table to try and justify or explain that increase that they can then feel comfortable with? So love what you're saying. Just wanted to throw that in there. Let's talk about marketing for a minute. Marketing itself, it's something that is consistent. It's something that takes some time, so it pays off in the long run, I would assume. What would you say about marketing?
I have found that whenever it's sort of like karma, if you if you believe or heard of karma, whenever I stop marketing, I don't get business. Whenever I start marketing again, I do. And the other thing is that when I market, I get business, but it's always from somewhere that I don't expect. So my belief is that you simply have to go out and do it, A, and B, accept the fact that you don't know where the business is going to come from, and it may not come from directly from the marketing that you're doing. I have seen that over and over and over, and it happens to me all the time. When I start marketing, I do get results. Um, I would also I highly, highly recommend a company called Story Brand.
Oh,
The word
yes.
Story Brand.
Yep.
Uh, Donald Miller, fantastic site for how you could use telling a story to explain what you do. I highly recommend that to anybody who's trying to figure out how to market.
Yeah, the secret there is making your client become the hero.
Exactly. Yeah, he's the best marketer out there. I love everything he does.
Yeah, very, very good. That's an excellent suggestion. The next thing, actually, just a thought on marketing. The analogy I use with marketing is a spigot in the dead of winter. And what I mean by that is, if you ever turn it off completely, you run the risk of the pipes freezing and breaking. And that means your system will break. You always want to at least leave it dripping, if not on, so as to avoid the pipes from freezing. And I think that's a great analogy for marketing. Sometimes the tendency is to just shut it off, and I've got all the clients I want. And there's two variables going on. One, you may have clients, and of the clients, one that you maybe ought to get rid of, or maybe you have clients and you're not aware of the fact that one of them may be looking to go elsewhere. They may be outgrowing your services. Maybe they're selling the company. Maybe they're doing something that's going to impact your relationship. And so, rather than being surprised by someone leaving your services or you getting rid of an undesired client and not having a marketing system that's at least functioning, you want to leave it dripping, is my point. And so, as long as you don't shut it off entirely, it's always there to be turned on more and kind of re-energized and grow. So that's something I think that complements what you were just sharing a moment ago. How do you discuss accounting services with a prospect? What are some of the highlights, things that you want to emphasize that the potential client needs to hear you say when considering your services?
Yeah, I think part of this goes back to the very beginning of our discussion, which is how educated is the client on accounting and finance, and just how much help do they need? Uh, and that is a starting point for finding out just how much help they need. For example, if somebody has a background in accounting and finance and they just need somebody to come in at the end of the month and take a look at their financials, maybe post some adjusting entries, and they understand their financials and don't need a lot of other help, that's one thing. If somebody's a creative and runs an ad agency and has no financial background, that's a different matter. So, in order to figure out the value that you're going to add, you really need to figure out the experience level of the person, of the client, in terms of their accounting knowledge. And if you know that, then you can figure out what the value add. And the value add is something like, what I hear you saying is you need A, B, C. And if I can deliver A, B, and C to you, here are the benefits you'll get. You'll spend less time in your accounting. You'll better understand your financial statements. The big line, and this is a line that I use in my writing all the time. You'll be able to make more informed business decisions.
Yes.
I think that's the number one thing an accountant should say. I use it in article writing all the time.
Honestly, and maybe this is my own ignorance, I've been using that phrase for a long time. I don't know that I've ever run into someone who's also said that. To hear that you've written that phrase in a lot of your material, that amazes me. Maybe it's a phrase more common than I'm familiar with, but I've always been saying when it comes to accounting services, the purpose is to educate and inform the business owner with the intent, the purpose of helping them make more informed business decisions. They should be leaning on the accounting information they're receiving to decide how to run their companies better. So, amen to what you just said. That's very good. That's excellent. All right. So, I've got two closing questions here to wrap this up. The first one is, who's a mentor you've had in your life, personal or professional, that's impacted you as to the decisions you're making and how you choose to live, personally or professionally? Who are they, and what is it that you learned from them?
Yeah, I'd say my first one is the accountant whose name is Joe, who was in my FINRA training class, who referred me to St. Louis University. He runs about a 15-person CPA firm in St. Louis, and I think what I learned from him, and he does a lot of tax work, is how to remain calm, professional, and frankly have a sense of humor when you're working a lot of hours and you're working on very complex issues.
Uh-huh.
I admire him a lot for that reason. The other person is named Dave, who is a good friend of mine. Who, what I have learned from him is really coming back from setbacks, and being resilient. Resilient is probably my favorite word. And my friend Dave has taught me to be resilient. He's come back from personal, professional, and physical challenges consistently over time. He's now 65, and he is also a mentor to me.
Love it. Resilient is a good word. Let's make it the word of the day for everyone. So that's a good one.
Yes.
Yes, that's good. Next and last question. What does the word freedom mean to you?
Oh, that's a good question. Um, I think for me, it means pursuing what you're good at, regardless of how long it takes, how much money, what it means to, what the result is financially, et cetera. I feel like in my case, I spent a lot of time. I was in the investment business. I really wasn't a good salesman. I was an accountant for years, but I found out later in life, probably around my late 40s, I'm probably a better explainer than I am either a salesman or an accountant. And accepting that and having the freedom to do what I think I'm good at, I think that's what freedom means to me.
Perfect. I appreciate that. Here's what I'm going to do. I'm going to take a quick moment here and recap a few of the highlights that I've found in our discussion today. And then I'm going to ask Ken for a final thought. So, real fast, let me start with the sponsors and just reiterate that in the episode description, you can go there and find basically a link to join a conference room. It's a free community where Ken offers some time to ask him anything. It's essentially on that site that you'll find in the episode description, where you would go to the Explore section, find the events, and ask to sign up for his Ask Me Anything, where he'll actually spend time in a 1-hour live chat answering questions that I'm sure you're wanting to ask. You can also get a free copy of the book all accounting professionals should have in their library. It happens to be the book Red to Black in 30 Days, a small business accountant's guide to quick turnarounds. It's literally the how-to guide to help business owners with the most common challenge they face, which is cash flow management. In this process, you'll actually see exactly how you can work with your clients to ensure that they move from being in the red to being in the black. So as a summary of our conversation, first of all, I'm going to begin by saying this has just been a wonderful conversation. Just to hear Ken, his journey of how it was that he got into the accounting profession, moved into offering accounting services, specifically with a lot of nonprofits, ultimately becoming a college professor and then a book writer. I think it's a journey a lot of the listeners, a lot of you who are listening can identify with. I think a lot of us, as we're in our career paths, wonder where this is going to take us and what that next step may be. And so to hear that in addition to running a successful accounting business, he also became involved in giving back, in the sense that he became an instructor, a college professor. He's written some books. All of these things, I think, are things that we can also aspire to do and see within our career paths. The other thing that I think was helpful were some of his insights, particularly about pricing, his thoughts there, marketing. I thought that was a great discussion. All of these things are applicable, particularly when you consider what is it we should be discussing or asking from the business owners that when we're presenting our services, for them to see the value in what we do. And I think my big takeaway from that was the word listen. We just need to be listening more to who the potential client is, what their needs are, and how we're best able to meet them. Because at the end of the day, it's literally giving them the information in a way that they can use to make more informed business decisions. So with that being said, Ken, what is a final thought you'd like to leave today with the audience?
My final thought is really have the courage to pursue a niche business, and don't worry about the fact that you're not going to be all things to all people. It is advice that I took seriously, particularly in the last 3 years, and it's really been a benefit for me. And I hope that the listeners will consider developing a niche.
Perfect. Well said. For this, I want to thank you, and at the same time, encourage our listeners to subscribe to the podcast and go and listen to our other episodes, each of which is committed to helping you build the premier accounting firm in your area. For information on this and other principles that you can apply in your business, we also invite you to go to universalaccounting.com. Universalaccounting.com is where you'll find free resources, additional information, things that you need to be doing to work on your business and, in fact, build the premier accounting firm in your area. That being said, I also want to encourage you to give us a phone call at 801-265-3777. And in doing so, we'd love to speak with you, find out more about you, your goals, what it is you're working on, and most importantly, see if there's anything we can suggest and encourage you to do to have the premier accounting firm in your area. That being said, have a great day, be safe out there, and remember this, if it's about accounting, it is universal. Take care.